Hi guys, hope you're all well and welcome back to the channel. So I'm going to do a bit of a February recap and an overall view of what I've been doing and why. Leading into Dubai, whilst I was in Dubai and since I've been back, okay. I have been short biased, so we're going to flick over to the charts very shortly and I'm going to detail my entries and exits. Some of them I've mentioned within my community and there's traders on there that have been following suit. Of course, this isn't financial advice, it's just an insight to what I trade and why. And also I've been noticing that not many people are being consistent, okay, whether that be gurus, mentors or otherwise. They're flicking from crypto to forex to commodities, and whilst we're all here to learn and broaden our horizons, I think that people should stick to the basics and be very well aware that this isn't a get rich quick scheme. And furthermore, that it's a consistency doing the same thing, which I know is a little bit repetitive. It's a bit like when I went to the gym. It was mundane compound movements, heavy benching, heavy squatting, deadlifting, etc. And when I go to the gym now, I see all these personal trainers and males and females training with fancy cables on cables, with pulleys. I seen a lass training glutes for 45 minutes and there was nothing really, happening there. And I'm not digging people out, but I want to show that there's the consistency within showing up and being accountable for your time. Are you sticking to your strategies? If you've gone wrong, recognize where that is. If you've let a runner run too much and you've nearly blown your account, there's very, very simple things, which I know it's hard to iron out at the very start, but these are the things that you need to be on top of, your risk management, your position sizing. So yeah, I'm going to flick over to the charts now and identify, what I've been doing and why, and hopefully it's of interest. Hi guys, so we're back on the charts. It's been a little minute. So here I'm going to explain why I was short bias, okay? I know a lot of people may have traded up to this, so on and so forth, or a million and one ways they want to reinvent the wheel. Well, I like to trade rather simply. Okay, when I'm scalping, I'm taking the profits and losses fairly quickly. However, when I do see these opportunities, whether a rally has exhausted itself and there's a possibility of a reversal, divergence, then I'm in, and I like to think that I'm fairly adequate at swing trading. So as you can see here, we've been reaching effectively lower lows. When you see in these massive wicks here, we all know that price is failing to reach here and break out, okay? So obviously this was of last year, where we can see that we've just had a little bit of carnage. Then we've had a decent start to this year, okay, but obviously these resistance levels here are failing, okay. So now we know that this is our highest price, if you like, for January of this year, okay. So we've had a fairly decent rally of 5%, so that's typically half of what you would expect to the S&P to return, okay. So using that as a rough guide, we can see that these areas here are of interest, yeah, because we've got resistance areas here. Not only that, we're kind of getting lower lowers on the larger time frame, so we're not getting, we're not punching through here, retesting it and then continuing on. This would potentially acts as a bit of a ceiling, so it's an area where I would like to short, okay. Yes, I would have liked to have got in here or of last year when we've got this double bottom here. Obviously we don't know where we're going to go now. Yes, I did short here, which I'm going to explain, but we'll go in order, okay. And again, I like to keep my trading simple, guys. Yes, I like to scalp, as I say, taking them small profits and losses for wages. But once we've seen that this has potentially exhausted itself, then the writing's on the wall. All these companies now, these blue chip companies, Amazon, Microsoft, they're all laying staff off. Recession, recession, recession. Yes, that doesn't really ring true for this last 5% increase, half a year's worth of gains, essentially. So that's where we are. So this wedge here, and this obviously supporting trend line, would lead me to believe that we're getting a bit of a squeeze here. So it's going to have to pop eventually, okay? So this trade here, as you can see here, 3rd of February, trade was placed. So I was actually speaking to one of my students. I've got a private WhatsApp group where I'm specifically sort of on it all day, every day, telling them what I'm doing and what I'm not doing. So yeah, so I was in here. I'll post the actual profit and loss, and I was up rather substantially, and I ended up closing it not as much as what it was. So a little bit of egg on my face there. So yeah, there we can see that we can see that these resistance points is very well looking back, because it's also very obvious when you're drawing it out. However, I have had this drawn and posted it on social media as well as my community, showing people why I was short bias, okay? And that's it. I mean, it looks very simple here, and having the balls to hold these positions, and like I say, when it's real money, you see a grand or two there. I typically will take a grand or two, but we could see that the squeeze was happening here. So I was hoping, I could have taken a small loss. Of course, I had stop losses in place. Should it have broken out here and romped onto 35k and onwards? But we've got to take in the fundamentals and the macro economy, as well as the data, which would lead us to believe that this has possibly overexhausted itself. So this is all ringing true. We're doing our homework here, guys, and we're painting a picture of where we're going to speculate with our money. And it's okay to be wrong. I keep saying to the guys, you can be wrong 2 or 3 times a week and have that decent 1 to 10 risk to reward. If you're having a 1 to 1 day, for example, okay, take the loss, and then you can potentially recoup it back. So this was this trade here, okay? So leading into the 9th, where I was actually in Hackerson, I had an alert come in my phone that we was reaching this resistance once again, okay? And I'd scalped it. I think we were just going ready for dinner. I had the Ferrari, and I shorted it, okay? I even did a little video. So again, I had rather a decent stop loss here, quite a large one, because I was waiting for it to break, potentially wipe out all the stop losses here. Therefore, the smart money, the liquidity, order blocks, you phrase it how you want, but this is what I'm looking for here. Potentially taking a bit of a loss. I mean, I would have probably hedged it up, although we're going for dinner, we're in Dubai, and I'm trying to sort of enjoy myself and get away from the charts. However, I don't want to miss this, okay? Because I've already placed the trade here. So by doing this, I was very, very comfortable that this potentially might happen again. It might act as a nice supply zone, as we can see here, okay? So this was pretty much me. I've done some odd scalps, and we can see that the market's failing here. This is a good indication that we've had a nice large move, and we're not pushing back up here. So this sort of mini range here, within my community, I've identified a mini range which I used to trade quite a lot of, and this is a nice example here where we're failing to reach and recoup the highs of 42.2, okay? So in here we had a little bit of chop, which I actually traded. I had 2 mega days scalping, which is my preferred method, okay? Believe it or not, I don't like hitting and holding, or as I call it, hitting and hoping. I just don't feel that I'm in charge of my money. And when you are trading with real capital, guys, when you potentially might see a rejection or something happen on the news, it could wipe out that technical analysis and may not go in your favour. So you might lose out on 20, 30 points, which in my case, if I'm trading £100 per point, 20 points is 2 grand. So I'm comfortable of trading multiple times throughout the month to earn my money. I'm a scalper. That's what I prefer to do, okay? So I scalped this bit of chop here, and I didn't actually know that the profits were what they were. And then I've done the same on Tuesday. So I've posted the results on Tuesday, I believe it was, and then Wednesday I've done exactly the same. There was £1,000 difference and pretty much the similar trades. Then we was coming into this rally here. We had a massive rejection yesterday and a bit of a bolt out of the blue from 800, okay, here. So I'm still short bias at this point. So I've not really traded this, okay, not really bothered with it at all. I just thought, I can see that I've got my trend line here. So if anything, I'm wanting to short in and around this trend line of 200, okay? Potential break, wipe out everyone's stop losses, then come under, then get in. Well, on Thursday night, I placed on my social media up here, I'm in short 2-3K. Warner Brothers come out, which again, a bit of a speculative move. You've got to remember, I come from the investment world. So am I really going to be investing into these companies now when they're laying off? I'm expecting this recession to take hold. This is my opinion, guys. It's not set in stone. I'm not saying that I'm the guru of fundamental analysis and I know what stock to buy, when, and so on and so forth. I'm just working on my technicals, and the last two trades, the two swing trades came in. So this is all ringing true to me. You know, this here. So I've got two solid trades under my belt. Okay. Of course, Wednesday, Thursday was good, but this here, I'm still short biased. Okay. Okay. If we'd have broken this trend line and retested it, okay, I would have potentially have altered my bias. Okay, I'd have potentially have fallen price action. However, I didn't. Worst thing of all is if I'd have actually have kept hold of this trade, it was 192 I placed that, so I purchased that at 192, which was Thursday, here, 192 there, it would have been 54k. I ended up taking 6, okay? I've been playing golf today, and I was happy with what I've done for the month. I'm just winding down for the month. I wanted to get on some onto YouTube, get on some screens and get, you know, some content out there for you guys, because one or two of you have been slipping in and saying, well, why have you been short biased? I've been short biased because I believe I'm understanding market structure and price action where it is, okay? So I'm shorting. I'm not wanting to get faked out, and I'm happy to short at the exhaustion point, okay? The diversion point where I potentially think it may reverse and go on its knees. Sorry for you investors, but look, we can kind of see that, you know, this is our supporting price. I was happy for yesterday to potentially test support once again, and that's what it done. I should have held it, guys, but it's hard when it's real money and I see 6k there and I want to close a trade, and I typically don't work Fridays. I go playing golf. So I wanted to enjoy that day. Yes, 40-50 grand would have been nice, but it's hard. Or I could have locked in 2-3k. But I still can't switch off, guys. I've got to be honest with you. So a lot of guys will have overcomplicated the trading because they can't stick to the basics, and they believe that they need to be doing something else to outsmart the market, okay? So a lot of guys may have bought here yesterday, okay? I was keeping an eye on that, and it looked rather fancy. If I was going to buy anywhere yesterday, if I was going to buy anywhere yesterday, it would have been here. So this area here, we had a bolt out the blue again. I would have probably bought here. However, looking on the 15-minute charts, I can see I did this yesterday. This area here where we shot out, we can see, I might be telling lies, we can see that that we've had various support or demand areas here, okay? Yeah, granted, this was a good while ago, but we can see that we've had some significant buying pressure here, okay? So if I was to buy anywhere, it would have probably been on the most recent, which would have been there, which again was 32 800-ish. Okay, so I'm not going to waffle on too much, but if I was going to buy anywhere yesterday, sorry, it would have been here from the previous demand. Sorry, it'd have been here. Forget that. But anyway, but I didn't, because I was wanting to see these trend lines. I was wanting it to retest. I wanted price action to push and potentially, you know, fake your investors out and the retail fools. And that's what I was hoping for, that we would potentially short here. So I shorted this zone as I felt that the rally from 800 had exhausted itself. I knew that Warner Brothers earnings were out, and I'm expecting a bit of a retracement. I believe that we may plummet one more time down to here. That is my opinion, and I'm sorry if that doesn't ring true with a lot of you guys. Or, you know, this might just be a big bear trap here, and we may bounce from here, this support area. So this is our new low, so to speak, for the year. We've rallied 5%, obviously given away 5%, so we're of a neutral sort of stance in the Dow Jones. Not too sure where the S&P is, and that's my opinion, guys. And like I say, we need to be sticking to the basics. Yes, you can overcomplicate it with a million indicators and so on and so forth, but essentially price goes up and down. And for me, I like to buy at significant key levels. Okay, I'll buy where I think stop losses are. Okay, and that's just how I trade. You know, it's not for everyone. I know a lot of people love 1,000,001 indicators, and that's fine. Well, I like to see where price is a supporting price, a resisting price, cross-reference that with my fundamentals, and stick with my strategy. The strategy works when you're implementing it day in, day out. The high's going all over. I've been at this now for a good while, and I've seen a lot of people come and go. I've seen a lot of mentors come and go. I've seen a lot of gurus come and go, and I've been following one or two traders, as well as a chap called Tom Holgard, I think he's called, Danish fella, Swedish fella. Very aggressive with his scalping, similar to myself. However, I think he can be a little bit too busy. Very, very good trader, far better than me. But I think he can be he's too busy. He's way too busy. I've been following him a good while now, a good 6 weeks or so. And I see a lot of other people trading crypto or doing this or Forex and 1,000,001 indicators. And I think if you can do the basics well, similar to Gordon Ramsay, you know, we go to his restaurant in Dubai and he does good food well. And it's the best of food in the world, in my opinion. Your bodybuilders, Dorian Yates and whatnot. When I first started the gym 20 years ago, I was training the old school, you know, compound movements, and really getting down and dirty. When you see these gym people now, personal trainers, they're not training properly, in my opinion. It's all cables and it's all fancy this and it's all fancy that, and it's just doing nothing. It's just not. It's not achieving anything, in my opinion, and I might be wrong, but all the bodybuilders that I see that are really putting in the work are lifting quite a bit of weight. And as Ronnie Coleman used to say, everyone wants to be a bodybuilder, but they don't want to lift goddamn heavy weights, and that's the way it is. Got some more notes down here, and a bit like myself, I've been predominantly scalping for the entirety of my career, but I've been picking up on swing trades because I understand how investors work. I came from the investment sort of world, went to jail, studied day trading for 2.5 years, read 1,000,001 books which tend to overcomplicate themselves for a time, joined a community and stuck to the basics well. Because if you stick to the basics well, once you can earn wages week in, week out, month in, month out, then you're capable of potentially offering signals and understanding where price is likely to go and why. You then you can really start adding to your armory, fib levels, this, that and the other, which I have a good understanding of them all, but it's a case of knowing when to scalp, when to swing trade, when to invest, understand the macro economy and where we are and why, and be accountable for your time. If you've gone wrong, recognize that, cut it, and stay structured. Stay with your routine, because over time, you know, this simple trade here was a reflection of this one here. Okay, this here is because I've had a good understanding of market structure, and this is probably a random move that possibly shouldn't have occurred. So yeah, that'll do for now. Hope this has been of use. And like I say, don't be afraid to be too, you know, knowing when to scalp, but sometimes taking a step back, looking at your levels, looking where price potentially may fake you out. Like a lot of guys here may have thought, oh, 200, yeah, we'll start going in, we'll have a full recovery. I was about not. So yeah, hope that's been of use, and I'll catch you again.